Let's time to move on for this week in trading history, and again, normally I kind of grab this by the reins, but I think that this is one that both of us can contribute quite a bit to. Now, we wanted to talk about September at the tail end of September of 1981, when we saw the 10-year Treasury yields peak out just over 15% back then, right?
Yep, that was the
And
top.
that was the yields top, and that was the big bottom in bonds, and that was the mark that began the beginning of the great bond bull market that still goes on today. And no matter how many people want to already call this bond bull market over, I still think we're in the midst of it, and it's not over yet. It is ninth inning, maybe going to the overtime, but it's still on anyway. I mean, you think it's over, isn't it?
For sure.
Oh my God!
I
All right.
actually think August was a climactic peak. But anyways,
So,
I might be talking my book.
yeah. So now let's put a little context because okay, fine. What carnage happened before? So we talked about Volcker in our prior history session when he came in and took over the Fed, but there was a massive spike in yields and interest rates back then, and it caused a lot of bond carnage. To kind of put this in context, yeah, for year over year, the prime rate went from 13.5% to 19% in 1 year. You had the discount rate 13 to 14. You had the Fed funds rate go from 13.05 to 17.06. You had 6-month savings certificates paying over 15%. I mean, I think mortgage rates were even close to 20, right?
Right. That was the period, Patrick, when they called bonds certificates of confiscation.
Really, eh?
Oh yeah, they were. Yeah, as bullish as everyone is now, everyone was that bearish back then. It's almost the exact scenario in reverse. If
Right.
you wanted to tell the story, you just kind of flip everything on its tracks, and it's exact same. Anyways, I'll let you continue.
Yeah,
Tell us
no.
the tale.
It's not meant to continue. I mean, listen, you can talk your book and tell us how bearish you are. But what I did want to share was a second interesting thing about the peak in those like there have been throughout this bond bull market a number of periods where yields had a substantial rise and caused some carnage. I just cherry picked one, which I thought was an interesting example, was this Fortune magazine article that was called "The Bond Massacre of 1994." And back then, I think you looked it up, but the 10-year yield went from what was it, 5 to 8?
5 to 8. Yeah, it was a big
Yeah,
move
5% to 8%. I mean, it's
in
it's
a short period. In a short period.
very short period, and there was over $1 trillion back then. Now, trillion used to be a lot of money back then, right?
Yeah,
Nowadays, it's a rounding error, but
that's right. It's just a day's QE.
yeah, one day's Q. But back then, there was over $1 trillion of bond losses in that period, right? We've seen many of these kind of periods where bonds back up, and it's really interesting to have seen that peak and what interest rates were. And at some point, we're going to see the existing bond market change its stripes, but I just don't think it's yet.
Oh no way, Patrick. Bonds are going to minus negative yields, and the trends in place. Get it.
-4, right?
Yeah, -4. Listen, that's just the worst case scenario. What if things really go bad? I'll tell you one thing.
Listen, I think the okay. Go for it. Sorry.
I'm sorry to step all over you. That's terrible. But I want to say one thing, and this is kind of important to remember. And I touched upon the amount of bearishness that there was in 1981 when bonds peaked.
Yeah.
And that bearishness continued for a long time. And I want to talk about one person in particular. It was Dr. Henry Kaufman, and I believe he was at Salomon Brothers. and they called him Dr. Doom. And Dr. Doom thought he was a great interest rate forecaster. And the reason he was because he was always bearish. And he always thought there was going to be more inflation and that the world was going to, explode in a fiery, incendiary, inflationary ball. And so he was always bearish. And he
was always right until
1981. But the point is that he was celebrated for the longest time, and then the whole way down in terms of yields up in bond price, he continued to be bearish.
Yeah.
And I contend that we will have the Henry Kaufman of this next turn, and I am hereby nominating you as my number one. It's my number one kind of choice. No, I'm just kidding. But there will be people, and this is an important thing to realize, is that
you mean like people that are bullish Bitcoin right now?
Yeah. So I think you're going to find that there's going to be a turn in interest rates someday. Yeah. I will be right someday, like you say. It's probably when I've given up on my position.
You will definitely have covered by then.
And I'll tell you the mistake will be to be getting bullish too early and not realizing this trend will flip and will go on for a long time. And I suspect there will be the guys that are celebrated today for being such great bond traders and so smart with their calls will stick and be long and bullish the whole way down. And it's important to realize that you should pick guys that are flexible, that are willing to change. And
so why should they listen to you? Because you're not
exactly.
flexible.
You're absolutely right. Absolutely right. You shouldn't listen to me. I've been bearish the whole way, but I'm just saying that there will be the next Henry Kaufman of this next bear market.
Inflation is coming.
It is coming, and you know what? You can laugh all you want.
One day you'll be right. Just as long as you keep repeating it over and over again long enough. One day you're gonna be like 70 years old, sitting on your porch, well retired, and like, see, I told you.
Okay.
I told you inflation was gonna come.
What I find the most amusing is that why anybody that has to own a bond for a long period would actually want rates to go down over the short run is beyond me. If you actually believe that there's no inflation, then you should want lower prices so that you can buy it and hold them. And it's really just the people playing hot potato and passing this from one on to another, and the central banks doing more and more that are cheering this bond bull market. Yeah. And I contend that there's more risk in the bond market than any other market out there. Anyways, that's what you've heard me rant. Yeah, I don't need another rant. This is this week in history.
Now, and you know how many people are gonna give you Twitter shame now? You just opened yourself up.
Well, that's not true because bonds have been going down recently. So the reality is that I don't get quite the same shame that I used to. Anyways, thanks for sharing that with us, Pat.